Hello everyone and welcome to Day Trader S&P 500. I wanted to let you guys know we are celebrating 25 years of Woodson Wave Report with 25% off the annual and monthly subscriptions for a limited time only. And I want to show you guys all about that, how that works. 25 years ago, in December of 1997, the first issue of Woodson Wave Report was published, and we are celebrating by offering you 25% off our most popular monthly subscription for a limited time only. Simply type 25 in the discount code box, and you'll instantly have 25% off of the first month issue. You can see here is our website. You click on register. There is register. This page comes up. Fill out all of that nice stuff. Click on the monthly subscription. Note there can be no refunds with the discount code. Come down to the discount code here. Type in 25. Hit apply and bam, there it is, 25% off. Thank you. Okay, without further ado, let's get rid of that. There we go, there we go, and there we go. And by the way, that discount is for the monthly and the annual, okay? Decided to extend that to both. Okay, today is the 18th of January 2023. This is Dale Woodson, editor of Woodson Wave Report. Let's get into the analysis. A lot going on, a lot of exciting things. Let's start as we usually do, or always do, with our Qs. There is the daily chart. There's the all-time high back in November of 21. There is a wave down. You can see all the direct hits here on the way up and on the way down. There's the B wave up. It doesn't show it, but that was a direct hit in terms of both price and time. You see the first wave down here with 1 down, 2 up, a 50% retracement, 3 down, 4 up, a 382 retracement, 5 down for the larger wave 1. There's the wave 2 up at 296.88, and you can see we drew this last time. You can see what we're looking for here. We're looking for a 1 down, 2 up, 3 down, 4 up, 5 down. The larger wave 3, this being 1 of C, 2 up of C, 3 equals 1 at 217.16. So it looks like 1 down is complete. 2 up looks like it's complete right near or almost perfectly on the 618 retracement. And then we're looking for wave 3 down. We need to see something below this wave 1 low here for verification that 3 down is in play. Of course, any move above the wave 2 high of 296.88 negates the count. We always want to know where we wrong. That's where it's wrong, and it's verified with a move below the wave 1 low. Okay, that is the Qs. Let's look at the S&P cash. This is a weekly bar chart from the all-time high. You can see we've got A wave down. Look down here. Here is A. It lasted a Fibonacci 21 plus 2 weeks. We had a B up right there. I put the down in red and the up in black and the dates in purple for a little clarification there, okay? So B up is black, and that lasted a Fibonacci 8 plus 1 weeks. And then we have C down. Okay, within C, we've got 1 down that lasted 8 weeks. We've got 2 up that lasted 9, which is Fibonacci 8 plus 1 weeks. And now we're in wave 3. You can see that wave 2 made a slightly higher high on the 13th, which was near our turn date in early December, and that was closer to the turn date, but it just eked out a higher high by less than a half a point. And here is 3 down. You can see that's 1 and that's 2. And again, the S&P is retracing near the 786, and if you recall the Qs on that too, they did near, where was that to at, right here, a 618. So the Qs and Nasdaq are lagging. That's because it's a bear market. They're lagging on the counter trend bounces up. They're leading on the way down like they always do, and they're leading on the way up. That's how we know it's a bear market, because the counter trend bounces higher are lower in the Qs and the Nasdaq than they are in the Dow and the S&P. So back to the S&P cash, you can see wave 2 here, wave 3. It's in red. If it lasts 8 weeks, it'll be February 7th. We'll see how that goes. That is for wave 3 down because we only got 1 down. It looks like 2 up, probably topped right near our turn date. We'll get on that in a minute here. But that's the bigger picture with A down in red, B up in black, and C down in red. 1 of C complete, 2 of C appears complete, and then we've got another 1, 2, okay, for the third wave. So let's look a little closer here from the all-time high. There you can see the A, B, and the C, 1 of C. Note this red trend line drawn from the all-time high. It hit the wave 2 high back in March. It hit the wave B high back in August. Again, direct hit on price and time. Price 816, time 43. I'm sorry, date August 16, price 43.25. And since then, we have 1 of C down, 2 of C up. Again, it poked its head above there and then darted down, poked it again. There's that difference in the 12.13 and 12.1. And 12.13 made a higher high. You can see right there, less than a point. Then we've got 1 down and 2 up. And you can see it poked its head above it again. And today, as we speak, it darted back below it. Like I said in our reports to our subscribers, as if the index knew I don't belong up here. I better get back underneath that line. Again, support becomes resistance. I'm going to see if I can get a little live. Let me make this bigger so I can get targets here. They're easier to hit if you widen it out. Let me see what that high actually is. And I went above it, I know. That is 40.15. See if we can get that. It's a little 5 points above. Come on, Dale. Bear with me a second here, folks. I'm going to try to get you. There's 40.15. Okay, so 3 equals 1 at 36.85 in the cash market, and a 1.618 at 34.80. Again, like that schematic showed for the Qs, we are looking for a 1, 2, 3, 4, 5. We'll get it here. Let me put that in for you guys. We'll get a 1, 2, 3, 4, 5, and we'll put the lines in for you. 1, 2, 3 can go to either one of those targets. Okay, and then we'll get in here and put those lines in so you can see the direction what we're looking for. There we go. Okay, 4 should stay below the wave 1 low over there, and 3 could be a 1 or a 1618, then the 4, and then the 5. The target were the larger wave 3, that's in parentheses. Again, there's the 1 down, the 2 up, the larger wave 3 in parentheses gains equality with 1 at 32.67, and the C wave, there's your B wave high over there. The C wave gains equality with 1 at 31.43. That's what we're looking for a minimum for this correction, if you will, even though it's going to be about a 2-year bear market by the time it's over. But really, it's a 535 ABC correction, and that's a normal correction right here. A down, 5 waves. B up, 3 waves. C down, 5 waves. So we got 1 down and 2 up. We still have 3 down, 4 up, and 5 down to go to complete a normal ABC 535 down, up, down correction. All right, that's the S&P cash. Let's move over to the ES futures. We're looking at daily chart from that B wave high. You can see I can stretch that out. That same resistance line, if you will, going all the way back to the all-time high. It touches wave 2 here, and it touches wave B here, and it blew off here. Blow off high is what I called it, a blow off top for wave 2 of intermediate degree. See if I can get those all in here for you guys. There we go. Okay, so there was 1 down from that August 16th high. There was 2 up, the blow off top on 12.13. We've got a 1 down and a 2 up. Again, things are moving pretty good as far as not only pattern, which is number 1, price is number 2, excuse me, and time is number 3, and they're all lining up lately. So in time we had 9 8 plus 1 Fibonacci days down. We had 13 plus 2 trading days up. I think I have that on the actual high, which was the 17th. It was a day away from our turn date. And those targets for this wave 3, this is 1 down here, 2 up there, 3 gains equality with 1 at 36.43, and a 1.618 at 34.01. And then the larger wave 3 of C, that's 1 of C right here, down, 2 of C blow off top there, 3 of C equals 1 at 33.55 and a quarter. So that was the daily, basically from the wave B high. We can get a little closer here and look at the hourly from that 41.80 high, which you saw was right here, that blow off top, that wave 2. From that high, we've got 5 waves down for 1, and then we've got that 535 up. 5 up for A in parentheses, 3 down for B in parentheses, and 5 up for C. We've got a lot of information on here, but we had a direct hit as far as price and time. We had a turn date of February 16th, which was a holiday for the cash market, but not for the futures. It was open for a few hours. And the high so far hit on February 17th at 40.30. You can see our wave 5 targets here. It was within less than 2 points of the Fibonacci target for 5. And then we had a 618 retracement for this whole wave 2 of 40.30.50, and it hit at 40.35.25. So a direct hit as far as price and time. Of course, pattern was perfect. Pattern number 1, price number 2, time number 3. Sorry, I hit the wrong button there. So what happens when all 3 line up? This happens. And here it's still going further down. It's about 12:30 Eastern time, and this thing is accelerating to the downside. You can see it's at 39.68, and it came from 40.30. So 70-point drop, getting closer to 2%. That is the hourly. I think I've got even closer for you guys. There's the 10-minute. There's that 1 up, 2 down, 3 up, 4 down, 5. And you can see what it's done since then. Okay. And that's falling apart, of course, as it should. And let's see if we even have something of interest on the minute. Yeah, there's that high back there on that 40.35 high. It is right there. Okay. So that's that C wave high. And then we look at it on a 1 minute from there, and we've got 1 down, 2 up, which was near 100% retracement. Of course, if it went above there, it was wrong. It didn't. And so we've got, I'm going to label this for you guys, okay? Let's get a 1, 2, 3, 4, 5. Oh, I don't want the lines in there. I'll get rid of them later. 2, 3, 4, 5. Let me fix that because there's too many lines in here. My apologies. Let's move that out. There we go. Let's make that a larger degree. That is submicro. There we go. Okay, so that's 1 down there. That's 2 up there. And you can see 3 gained equality with 1 right here at the 1618. I'm going to put those 4 and 5s away for now. So you can see that is 1 down. That is 2 up. And this goes 1, 2, 3, 4, 5 for 3. And you can see, you can look at this internal wave count, 1, 2, and there is, right there was a nice confluence, if you will, of targets right around 39.69 and 39.70. It has overshot it. Again, if it's a third wave, it can take on any multiple it chooses, a 1.618, a 2.618, a 3.618, and so on. So we'll see if that is close to holding there. That's a little bit below. It looks like it hit about 65, and 69 or 70 was the target. So from there we can expect a 4 up and a 5 down to lower lows. That's the 1 minute. I want to show you guys the report we put out this morning for our monthly subscribers. Okay, there is the monthly, the morning alert. I'm sorry. I'll show you guys this. We had a January 16th fib turn date. Looks like it turned on the 17th. Within a day, and we had a 40.32.75 price target and an actual 40.35 and a quarter, and there was another one hit in there. And here is that chart with all of that information. And again, we had a direct hit on price and time, and it's a beautiful thing. Okay, so we still want to allow for a move up to those higher targets, if you will. Okay, there we go. Those are still in play unless or until those lows are broken. I think I put that in here. Yeah, the downside, what the bulls need to see right here. You need to see these make or breaks up here broken to the upside. I'm going to do this like this so it's a little easier to see on one page. There we go. The upside here, for you bulls out there, you need to see these highs broken to the upside. That's 3 degrees of trend, a 10-minute chart, an hourly chart, and a daily chart. Those are those previous highs, wave 5, wave 2, and wave B. Need to see those broken. Downside, need to break below for the bears. Need to break below these lows for verification of wave 3 of C. A third of third waves, 3 degrees of trend. Should be exciting. We're seeing it just kick off here. There we go. And there's one down and there is two up. Okay. So here we go. We'll see how that goes. Looks like it's playing out pretty nicely. All right. Thank you, everyone. Until next time, take care, everyone.